Yo, what's up, everyone? What's going on? Here, let me go ahead and put this out here. Hold up. Let me put like all the links out so people can watch it. And my camera was almost dead actually, so I'm really hoping this doesn't mess up. Let me see. Watch it here. Beautiful. There's the class. There it is. All right. Let me put out the link here to start the actual thing. Let me see. When events start event. Let me see. Hey, what's up, guys? Here, hold on. Let me go ahead and hold up. Yo, what's going on, guys? What's up? What's up? What's up? What's up? What's up? All right, here. Let me go ahead and make sure everything is looking good for the class. Let me see. Okay, I'm screen sharing good. I really hope my camera doesn't die soon. Because I forgot to charge it, so I'm really hoping that doesn't do anything. Um, Here, let me go ahead and copy the link here, guys. We ended up we ended up catching a 50-point trade literally like 5 minutes before the market closed. So I'm gonna go ahead and hey, what's up, Brickster? What's going on? I'm gonna go ahead and what's it called? I'm gonna review the trade, right? Let me go ahead and do that. Okay, perfect, perfect. So what's up, everyone? What's going on? What's going on? My people on YouTube and the people on Discord. What's up, guys? But okay, let's go ahead and start, right? So let me go ahead and take this out of the way. Oh shit. Oops. Let me do live. There we go. All right, what's up, everyone? Okay, so to start off, I'm gonna review the first trade or the only trade that we took today. You guys know. Let me see. I took that trade. I made $1,500. Bro, that is insane, bro. That is actually crazy, right? And everyone in the Discord, welcome up, guys. What's up? What's up? Here, let me make sure that everything is looking good. Let me open up the chat. What's up? Options. I don't do options. I used to, but I do. I mainly do futures. Yeah, futures, right? But everyone in here, welcome, welcome, right? So here's what we're gonna do, right? I'm sure for those in the premium, literally everyone saw how we read the trade. You guys know that today, right off or not right off open, the entire day, the market has been extremely, and I mean extremely bearish, right? Why has it been bearish? Well, you guys, I don't know if you guys know, but we actually had Tesla earnings yesterday at market closed, which is why the market gapped down today. Which you guys can see on NQ, we had this massive gap right here, and that's where the market ended up dumping almost 1,000 points today, which is actually crazy, right? But we managed to catch one trade today, which I'm going to show you guys exactly how we managed to catch that. Let me see. Bro, you're good. Thank you, Ashu, bro. Thank you. Thank you. Let me see. Yo, David. Hey, what's up, Clockwise? And what's up, everyone that joined, guys? Welcome. Welcome. And then, of course, here, let me go ahead and put this out. If you guys do want the recording to this live, which I'm going to explain everything, here it is. Here it is. If you guys do want the recording, feel free to subscribe and all that stuff, right? Okay, let's go ahead and start this up, right? So what's the first thing we want to go ahead and do in the market? Well, you guys know the first thing I always do is what's it called? You have to mark out drawn liquidity, right? So you guys know my strategy. It consists of 4 confirmations, right? We've reviewed this in the last like 4 classes, right? What does this consist of? Well, simply it consists of trend, drawn liquidity, MSS, and fair value gap, right? So these 4 things is what pretty much what helps us find all these setups all the time, right? So I'm gonna go ahead and delete all of this, and we're gonna go ahead and find it all together, right? So let's say that the market went ahead and opened up today, because you guys know we trade at what's it called at 9:30 in the morning every single day, right? So let's go ahead and replay this back to 9:30, just like that, right? So we know that the current market trend is pretty bearish, right? We know this because the market is constantly creating lower highs and lower lows, right? You guys can see, if you get the trend line, you guys see, yeah, we're currently bearish, and we're in a bearish trend, just like that. So we know that the market is set to go lower, right? And lucky for you guys, we know exactly where the market is going to go to by using drawn liquidity, right? If you guys have not checked that out, you guys can always check out my YouTube. I have all the videos on there, which will be right here in the chat, right? If you guys don't understand what drawn liquidity is, the video is all there from A to Z, right? But anyways, now we know that the current market trend is pretty bearish. We need to know exactly where the market will go to if it wants to keep going down. How do we find this? Well, in simple terms, or pretty much summed up, you guys just expand your time frame, zoom out, and see exactly where the market has bounced from previously around this price range. How do we know this? Well, if you go over to like the 30-minute time frame, for example, right, and keep in mind this is gonna be very far because the market hasn't really gone this low in months, right? So if we keep going back, right, you guys will see. Wait, actually, let me see. If we keep going back, you guys will see that we have the levels down here, right? Let me find them on the 15-minute time frame because this is where I found them today. Let me see. So we have these levels down here. And matter of fact, hold up. Let me go ahead and reset this to make sure that everything looks good when I started trading, which was at 10 in the morning. So it should be just like that. Okay, perfect. Right? So you guys see, the market trend right off open is extremely bearish. I mean, we're getting a ton of selling. Everything is looking extremely bearish. So how do we trade this? Or how do we know exactly where the market will go to if the trend is so bearish? Well, if we pretty much go back to the time zone, you guys can see that the current price is at 19,485. So how do we know if price is currently going to keep going down or keep going up from this price range? Well, first of all, we need to find drawn liquidity. How do we find that? Well, pretty much to find drawn liquidity, this is it summed up, is you guys, let's say for example, you guys know the market is currently, it could either be in an uptrend or a downtrend. This is known as a bullish trend or a bearish trend, right? For my new people, bullish means up, for bearish means down. My bad, right? So in this case, let's say that the market is currently in a bullish uptrend, right? Just like this, right? What are we doing in this case? Well, the market is not going to be only going up, right? It's going to be going up, pulling down, going up, pulling down, right? In an uptrend, every single pullback that the market has is going to be known as drawn liquidity. Why? Well, when sellers tried to bring this down, buyers found the level and bounced it back up, creating a level of liquidity. And I'm going to show you guys exactly why this is liquidity in this case. Right? So we have this line, right? We have drawn liquidity in every single line up here, right? So every single pullback is going to be a DOL, which stands for drawn liquidity, right? So we're going to have one here, we're going to have one here, we're going to have one here, and we're also going to have one here. Every single pullback that the market has as it's going up is going to be drawn liquidity. Now, if the market is going down, same case, right? You're just going to be using the pullbacks to the upside as DOL. So how's that going to look like? Well, let me go ahead and find it right here. We have level 1, we have level 2 and level 3, right? So you guys get the point. So we have drawn liquidity. Every single pullback that the market has, depending on the trend, it could be bullish or bearish. Every single high or low that the market creates is going to be drawn liquidity, right? So in this case, you guys can see that the current market trend is pretty bullish, right? I mean, we know this because, of course, the market is currently breaking new highs, and every pullback is a lower pullback. This is known as a higher high and higher low. Right? So what we're going to do in this case is, now that we know that price is currently going down into these levels down here, we're going to see which level is the strongest level to possibly get a reversal off in the market. Right? So what we're going to do here is we're going to go ahead and mark out every single low that the market has. How do we know the lows? Well, we know we have one right here. Why? Because the market is currently pushing up. It found this low, and of course, it gapped up like crazy. Right? So this level at 19,500 is going to be our first level of liquidity. Now, it's not going to be as important because you guys know that the current price is at 19,485. So we already took out this level. It's not really as important anymore. Right? So now that we know that we took out this level, let's go ahead and keep finding some levels that where the market could possibly bounce from. Right? So what we're going to do here is we're going to go ahead and mark out this one. We're going to go ahead and mark out this one. And you guys can always mark out the ones down here, just like this, right? And so on, right? But the ones that we're going to be paying attention to is going to be 19,433, 19,374, and of course 19,233, right? And here, let me double check to make sure I have the levels correct here. Let me see. It was 240.25. So it should be this level right here. Perfect, 240, right? So how do we have these levels? Well, the main reason we have these levels is, once again, the market is in an uptrend, right? Each pullback that the market has in an uptrend, we're going to be marking out the pullback as our level of liquidity. Now I'm going to show you guys exactly why these are our levels of liquidity. Well, main reason being, okay, for example, right? Let's say the market is in an uptrend. The smartest thing to do is, of course, play with the trend. So you guys are going to be looking to take longs if, of course, the market is being bought up, right? Here, let me open up the chat here. Okay. So yeah, in this case, since the market is being bought up constantly, right? Each pullback that the market has is going to be a buying opportunity for the bulls, which is going to be, it could be you guys, it could be me, it could be anyone, right? So when you guys start entering into longs, right? Ideally, you will place your stop loss at the most recent low, right? Where's the most recent low going to be at? Well, let's say, for example, right? Let's say that we're going to go ahead and enter longs right here because we know that the market trend is currently bullish. I mean, come on, right? We're making these lows, we're making these highs. It's pretty obvious that the market trend is bullish, right? So let's say, for example, we want to go ahead and buy at the breakout of this high up here. So it'll be just like that. Where are we going to place our stop loss? Well, we're going to go ahead and place our stop loss at the most recent point where the market went ahead and bounced from, right? Now, you guys know that billions of, if not trillions of dollars goes into the market every single day. So you guys won't be the only ones with this exact stop loss. Actually, millions of traders like you guys, like me and you, we're going to be having the same stop loss. Right? So what ends up happening here is, you guys know what a stop loss is pretty much you're telling your broker that if the price goes below a certain level, you want to go ahead and get rid of that contract, right? So what's happening here is if a lot of people are placing their stop loss, for example, at 19,010, right? It creates liquidity because there's a bunch of orders, right? There's a bunch of orders waiting to be filled. Now, you guys know I trade based off the bank concept, right? Where banks, they don't want to buy as the market is going up. They want to buy at the lowest point and, of course, stop you guys out. You guys know that the market consists of where there's a buyer, there's a seller. Where there's a seller, there's a buyer, right? In this case, if we're going to go ahead and enter longs right here, right, as the market is going up, right, and we place our stop loss at 19,010, right, it creates a liquidity pool where there's if the price goes below this price, what ends up happening is we're going to go ahead and sell it, and we're going to sell it to someone. It could be an institution, it could be a bank, or it could be an algorithm, right? I'm sure you guys know about the bank theory that, you know, they can see your stop loss. I don't really think they can see your stop loss, but what ends up happening is you guys know that the market is made up of data, right? The algorithm can read the data, which is, it's not confirmed, but it's a huge concept, which is what I trade, and you guys see exactly what I trade, right? So this algorithm can actually read where all these major stop losses are being held. In this case, for example, we have a lot of liquidity here at 19,010. Right? So the algorithm, what it's going to do is it's going to manipulate the market to actually go down to this level. It will stop everyone out, which is known as a liquidity sweep, right? And after we stop everyone out, we sell our orders to the banks, right? What ends up happening? Well, banks get filled at the lowest point possible, which they know it's the lowest point because this is where all the orders are sitting at, right? They get filled, we get stopped out, and then the market goes back up. Now, if I ask you guys, I've asked this before, but if I asked you guys this in the chat, how many times have you guys placed a stop loss? It hit your stop loss to the perfect point, and the market goes back up, right? It happens all the time, right? It actually happens a lot. It happens every day. Yeah, too many times, exactly, right? So what this is known as is a simple liquidity sweep, right? So instead of you guys getting swept, there's actually a way to trade this, which is what I'm going to pretty much teach you guys right now, right? So now that we know that the market is currently going down, right? We're going down into these levels of liquidity, which is going to be at 433, which is going to be this low right here. We have a level at 374, which is going to be this low right here. And we also have a level at 240, which is going to be the lowest point where the market went to before it pumped up, right? So now we have these levels. We want to go ahead and kind of just see how the market reacts as it's going down into these levels, right? Do we bounce off them? Do we keep going lower? How can we really trade this? Well, let me show you guys, right? So let's go to the current price action right now, right? So which will be right here. Right, you guys can see that, yeah, once again, the market trend is extremely bearish. So we want to go ahead and see what we can really trade off here, right? And I'm going to show you guys exactly what it is. So in this case, let's go ahead and kind of catch up with the confirmations that we have in the market, right? Because you guys know, I trade 4 confirmations, right? I make a living off these 4 things right here in the market. So the first thing is the trend, right? So I'm going to put here confirmations. So number 1, trend, right? We know exactly what the trend is. The current trend is bearish, right? So if we're going to be looking for a trade, it would ideally be to the downside. Now, after we have the trend, the second thing we want to start looking for is draw on liquidity. We already have the draw on liquidity, right? Let me see. Blast, are you live on Discord? No, I am live on YouTube. I am live on YouTube, right? So right here we have the draw on liquidity. We know exactly where it's at. How do we know? Because we expanded our time frame and we found exactly what levels are being respected and what levels have the most liquidity, right? So if the market were to go down, it will go down exactly into these levels of liquidity, right? So now that we have the drawn liquidity, we want to go ahead and see, does the market have a continuation signal or are we getting an MSS model? I'm gonna show you guys exactly what an MSS model is. And yes, I'm recording it, so don't worry, right? So for the third step, the third confirmation, my bad. We want to be looking towards, is the market going to continue going down, going lower, or form an MSS. Now, what is an MSS model? Well, you guys just literally exactly what I explained right now with the bank theory, right? When they sweep liquidity and all that stuff, pretty much what ends up happening is the market structure shifts from being bearish to being bullish after the liquidity has been swept. So how does this look like? Well, let me show you guys right now. Right, so let's say for example, the market trend is bullish, right? Just like this, and we have a ton of liquidity lying right here, right? So I'm gonna mark this out as DOL, right? Drawn liquidity. So it will be drawn liquidity, right? What ends up happening here is you guys know that the current market structure is bullish. Let's say the market structure starts shifting bearish, meaning that we're going to start seeing some downside, right? What ends up happening is the market takes out liquidity. Anyone that had their stop loss or orders filled right here, they're going to go ahead and get stopped out, right? They get stopped out, they sell their orders to the banks, right? Because the banks, they don't want to be buying as the market is going up. They want to buy at the lowest point possible. Where's the lowest point possible? Well, pretty much where the strongest level of liquidity is lying, right? So in this case, for this example, we're going to have liquidity right here. So what ends up happening is they get filled, right? Keep in mind, the current trend is bearish. Why is it bearish? Because the market is making lower highs and lower lows, right? So we sweep this level of liquidity, right? The banks get filled, and out of nowhere, you start seeing that the market starts going up, right? This is known right here as an MSS model, right? So what is an MSS model? Market structure shift. This is what it stands for. Market structure shift, right? Now, if you guys want to learn more about this, let me go ahead and pull up the video real quick, because I know you guys will absolutely thank me for this, right? It's helped a lot of people, and I'm sure it'll help you guys out too, right? So let me go ahead and copy the link. Okay, so I'm going to go ahead and send it over in the chat. If you guys do want to save it for later or whenever, it'll be right here. Understanding drawn liquidity and MSS. This is a must. You guys must understand this in order to trade the strategy that I trade, right? So you guys need to watch that video, right? So once we got that out of the way, if you guys want, save it for later. Make sure you subscribe and all that good stuff. But now that we know exactly how this concept works, right, what can we do from here? Well, let's go ahead and pay attention to the current price action, right? In every single one of these levels of liquidity, we want to go ahead and see exactly how the draw on liquidity reacts. Do we keep going lower, or do we reverse and go back up, right? In this case, let's go ahead and see, right? Keep in mind, the selling is extremely strong. So currently looking at this right now, what is going to be our fourth and final confirmation, which will be the cherry on top to take the trade? Well, our final confirmation will actually be the entry point, right? Which will be number 4, fair value gap or inverse fair value gap. And I'm going to show you guys exactly how to trade these, right? Can we please have a video of the live after? Bro, don't worry, I got you. It's all recorded. I'll send it over once the live is finished. I got you. But okay, so for our final confirmation is going to be number 4, fair value gaps or inverse fair value gaps. Now, I can't really go too into it because it's extremely long to cover. So what I'm going to do here is I'm going to go ahead and send the video that you guys need to pretty much watch, so you guys can understand my entire strategy behind fair value gaps, right? So let me go ahead and send it over right here. Now, I want you guys to go ahead and watch the drawn liquidity and the MSS model video, and also I explain everything from A to Z, from beginner to expert, on fair value gaps and inverse fair value gaps, right? Is the pullback from a break and recess of New York Open considered drawn liquidity? Yes, every single pullback that the market creates in the entire market, could be Asia, London, or New York, it's all drawn liquidity, right? So yeah. Now, in this case right here, you guys can see that we have our complete confirmation, right? And I went ahead, once again, and sent the link right here. Yeah. So let me see. You guys can see we have the drawn liquidity and MSS model video, and we also have the one that says free class. That's where I explain my entire strategy from A to Z, right? So those 2 videos are a must, right? If you guys, of course, want to master my strategy, it's on those 2 videos, right? And it's completely free, no strings attached, it's all there, right? But okay, and now that we know exactly all the confirmations that we have in the setup, we want to start looking for a possible trade to take in this case, right? So what is the first thing we see right here? Well, we know that we have the trend, right? So what we're going to do here is I'm going to go ahead and put a check mark just so we can be a little bit organized, right? So it will look like this. So we have the trend, right? In this case, we also have, let me see. In this case, we also have the drawn liquidity, which I'm trying to grab it right here. We have the drawn liquidity. Where is it at? At 433, 374, and 240. Right? Exactly, Buddha. Exactly. We also have a fair value gap. Right? So our current confirmation would be the fair value gap. Where is it at? Well, if you guys understand my fair value gap strategy, or you guys have watched my previous classes or videos, you guys will know that this one right here would be a valid fair value gap. Why would this be a valid fair value gap? Well, the first thing you guys would always want to do when you guys are trying to mark out any sort of fair value gap or inverse fair value gap is you guys need to go ahead and measure the candle. No, it's more than 40 points, not 30, right? So when the candle is more than 40 points on NQ or more than 10 points on ES, that will be a valid fair value gap. So how do we know this? Well, what you're going to do is you're going to go ahead and grab the candle from the complete top to the bottom, right? And in this case, this candle is way more than 40 points. It's 127 points. So what you're going to do here is you're going to go ahead and mark out the gap for the fair value gap. Now we know that it is a valid gap, right? Keep in mind, anything here that says more than 40 points will be valid, right? So what we're going to do here is we're going to go ahead and get the rectangle, and we're going to go ahead and mark out the fair value gap just like that, right? So what is the one confirmation that we're kind of missing in this case? Well, it will be the continuation or a forming of the MSS model. Let me see. Does this strat work for other futures? This works for ES, NQ, crypto, SPY, QQQ. It works for anything that you could possibly trade. Yes, because where you're trading is you're trading volume in the market, right? So if you guys can trade volume in the market, this is the strategy for you, right? Because you guys know, yeah, it works for anything. It literally works for anything. But let me see. How much is the gap for S&P 500? 10 points. 10 points. So how would that look like? Well, we go over to ES. Let's try to find a value fair value gap, right? So a value fair value gap would actually look. Let me see. Let me try to find one. Would this be valid? Yeah, right here. For example, this one right here, this candle, or it could be this candle as well, right? This candle would be a valid fair value gap because if you measure it from the complete top to the bottom, you guys can see that it's 20 points. Anything more than 10 points would be the perfect fair value gap on ES. On NQ, anything more than 40 points will be also just as good, right? So yeah. Now let's kind of go back here. Let me search up NQ. Now, okay. So here, let me catch up with the chat. What would you recommend to trade? Do I trade gold? I would recommend to trade gold. I have a lot of traders in over in my community that they trade gold. They love it. They make their money out of it. But me personally, I've always been kind of into trading NQ and ES. Main thing being NQ. So if you guys look at my alerts, you guys will only probably see NQ. Right? It's my go-to thing. It's what pays the bills. And you know, I'm pretty good at trading it, I would say. Right? So in this case, what is the one thing that we're missing in this one setup? Right? Well, here, let me go ahead and go back right here. Right here. Right? The one thing that we're missing in this setup would be the continuation or the MSS model. So how do we know how to identify this? And it's actually extremely easy, right? So first of all, we know that the market trend is extremely bearish, which is why we have the trend, right? So what we want to be looking for here is we want to see exactly how price reacts based off these drawn liquidity levels, right? Do sellers start getting weaker around these levels, signaling a current market structure shift to the upside, or are sellers strong enough to keep going down into the next level of liquidity, right? So the way this is going to look right here is if I play the candle, you guys see that we ended up breaking below this level of liquidity, right? So ideally what you guys want to be looking for here is to start seeing if buyers can gain control. That'll be your confirmation to a possible market structure shift. So how would that look like? Well, ideally, if it does play out, it would look like this, for example, right? So let's say we swap liquidity, which we kind of did right here, right? Ideally, what you guys want to be looking for is for buying to start coming in. It doesn't have to be the strongest buying, but it just has to be just buying in general. So you guys start seeing new highs being created, right? Just like this, for example. This would be your confirmation of a market structure shift, right? But in this case, let's go ahead and see what ends up happening. Well, you guys see, we're not getting the market structure shift. Sellers are still in control, right? So if we keep playing this, you guys can see we took out 433. We didn't really do anything, right? Later on, maybe like 2 candles after this 433 candle, we ended up taking out the next level of liquidity, which is at 374. Now, you guys know exactly how we find these levels, so it's not too hard to find them, right? Now, same case goes here. If we can't sweep liquidity up here, we can possibly sweep it right here, and we can go right back up into these fair value gaps, right? So let's see what ends up happening, right? Well, it kind of seems like right now sellers are still in control. It does not mean that the market structure still can't shift, but the possibility of this happening is not very likely, right? So you guys can see right here, right? If I keep playing this, there's no cue here that we're gonna, we're gonna flip from bearish to bullish, as buyers aren't really in control, right? Sure, we might have gotten some buying candles here, but it's not enough to really tell us that the market wants to go higher, right? If I keep playing this, you guys will probably see that we keep going lower, right? And here is where the trade comes out today, right? So you guys can see, today the market has been extremely bearish, right? We've been taking out drawn liquidity, and we've been getting the continuation move, right? So how exactly did we catch a quick 50-point trade before the market closed, right? That's the main question here, right? So we have the confirmations, we have the trend, we have the drawn liquidity, but we don't have the fair value gaps. We actually have the continuation, right? So what are we looking for here? Remember what I told you guys, in every single level of liquidity, what we want to be looking for is a possible sweep followed with a trend flip, right? Sure, we might have went below 40.33 and not made anything, and as well as 374, but keep in mind, we also have more levels to the downside, which in this case will be 19,240. Right, now pay attention to this level, as it's going to be extremely important, right? So if I keep playing this, you guys will see that we ended up, let me see, it was, wait, which rally gap was it? Hold on, let me go ahead and double check here. Let me see. Okay, it was this one right here, right? So I believe it was. Let me see. It was. Which Ferrari gap was it? Wait, hold up. Oh, because we're on the 15-minute time frame. That's why. I got confused there. Okay, my bad, my bad. Okay, here it is. So what we're looking for in this case is, remember what I told you guys about the fair value gap rule, right? Anything more than 40 points will be a valid fair value gap. Now, we have a few fair value gaps here in the market, right? And we can mark it out just like this, right? So the first one would ideally be right here, right? This is actually not a valid fair value gap. How do we know this? Because this candle is not any more than 40 points. It's actually 30 points, right? You guys see it right here, right? So we're not going to be paying attention to this candle, right? Can we mark this one out as a fair value gap? Well, let's go ahead and measure it, right? First of all, yeah, it is a valid fair value gap. But in this case, it's not very valid because the candle, the imbalance already got filled, right? Ideally, when you guys are looking for a fair value gap, you guys want to make sure that there's a big gap in that candle. In this case, there's no gap, right? This wick kind of messed it up. So I personally wouldn't trade this candle, right? When you guys are looking for a valid fair value gap, it would ideally look like this, right? You measure the candle, right? It's about 112 points, right? And you need to make sure that the candle has a gap in the middle. So you mark it out from the bottom wick right here, like just like that, right? And this would be your fair value gap, right? How about SPY or QQQ? Now, I'm not too familiar with stocks with fair value gaps. I know they do work, but if you're going to be charting SPY or QQQ, I would suggest you guys trade or chart either ES or NQ. They're the same exact thing. They just give you more of an understanding in the market, right? So yeah, NQ is the same exact thing, not a penny different. You know, there's no difference, right? It's the same thing as QQQ, right? If you guys are trading SPY, you guys should be charting ES. Like I said, there is not a penny of a difference, right? They're the same exact thing. It's just two different markets, right? They still move the same exact way, but I would suggest to chart ES or NQ. It just gives you more of an understanding, right? So if you're going to be trading QQQ, for example, you guys could be trading this exact setup, right? But in this case, this is exactly how a fair value gap should be looking like. So if you guys want to take a picture, here it is, right? But in this case, the one setup that we ended up taking right here is the current fair value gap that we kind of had, right? So what is the current fair value gap? Well, let me show you guys the exact game plan that I had right here, right? So this is where it starts getting, you know, pretty juicy, right? So what we're going to do here is we can see that this fair value gap is a valid fair value gap because it is 43 points. This candle is more than 40 points. So, and we also have a gap right here, right? So what we're going to do is we're going to go ahead and mark it out just like that, right? So what are we looking for in this case, right? Well, let's bring back the confirmations in, you know, that we pretty much need, right? So here, let me go ahead and copy this. Boom. Okay. So in this case, let's kind of catch up with our confirmations, right? Pretty much what we're looking for here ideally would be an inverse fair value gap. And I'm going to show you guys exactly what I saw. Let me see, 40 points with, yeah, with the wick. Not just the body, it can, it's the wick included. But you, Mantis, you need to make sure, here, let me catch up with YouTube. You guys need to make sure that it is, what's it called? Most of the candle is a body candle. If it's mainly a wick, that would look like this, for example, like this, right? Let's say, for example, this candle was a 40-point candle. It needs to look like this. It needs to be a full body candle. It can't be half of a wick, right? Now, let me see. Is the 40 point the same for Forex? Okay, I don't know too much about Forex. Like I said, I do know it works, but there's a different point system for every stock or commodity or whatever you're trading, right? So you need to backtest it on your own. There's no difference. The candles should be looking the same and they should pretty much react the same. But you guys need to just pretty much measure the candles and see which ones work and which ones don't, right? So a little bit of backtesting here and there, right? Let me see. Okay, I'll note that. Perfect, perfect. Fair value gap, but with the small and very not, it's not worth taking. No. So yeah, exactly, Cheerios. In this case, right? If a fair value gap looks pretty small, the gap is extremely tight, I will not trade it. You need to make sure that there's a pretty reasonable, you know, gap inside of the candle so you guys can actually trade it, right? But okay, so in this case, right, what are we looking for? Well, let me show you guys exactly what I'm looking for right here. Right, I'm gonna give you guys my entire game plan on what I was thinking, what I was looking for, and exactly how you guys could have traded this, right? So here, let me go ahead and pull up my entire screen share, which, okay, there you go. Now you guys can see everything, right? So let me go ahead and pull up the game plan, right? So here's what we're looking for. I went ahead and told everyone right here that looking at NQ coming into the final hour of the market, which is pretty much the only time that we had to set up this entire day, right? We finally had a setup. right? What does the setup look like? Well, it was like this, for example, right? We had the fair value gap and we just swept liquidity, right? So what we're going to do in this case is NQ has currently been on a downside or on a downtrend all day, right? And we've been taking out every single level of liquidity. Now we finally approached the final level of liquidity, which is actually at 19,240, right? So what are we looking for here? Well, we're pretty much just looking to see if NQ can go ahead and take out 19,240, which is drawn liquidity. We sweep that level. After we sweep that level, if we can manage to get some sort of a market structure shift, we can go ahead and take longs off the inverse of the bearish fair value gap, right? So let's kind of catch up here with the confirmations, right? So in this case, like I said, we have the trend, which is bearish. We have the drawn liquidity, which is at 240. We have the MSS model forming, which is the third confirmation. And the final confirmation would be this inverse fair value gap, right? So, yes, this fair value gap is a bearish fair value gap, but since we know that the market is trying to go up, right, since we are sweeping liquidity and getting an MSS model, what we're going to be doing in this case is we're going to be trying to inverse this fair value gap. So how would that look like? Well, we simply just look for a break above the bearish fair value gap. Once you get that break, that'll be your cue to go ahead and enter either calls or longs depending on the market that you guys are trading, right? So in this case, it will look like this. This is the current game plan. Now, if we tap back into this thing, you guys can see exactly what I'm looking for, right? We have the bearish fair value gap, we have the sweep, we have the trend, and we have the drawn liquidity, right? So before we take this trade or before anything happens, you guys need to be prepared to know exactly where you will get stopped out if the trade goes against you, and exactly where you would take profit if the trade goes your way. So how do we find these levels? Well, lucky for you guys, it's extremely easy, right? The same way you guys found the drawn liquidity to the downside, right, is the same way you guys will find the drawn liquidity to the upside. Like I explained, if the market trend is currently bearish, right, which it is in this case, just like this, right, bearish, 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 you guys are going to be marking out every single pullback that the market has to the upside, right? Of course, in a bullish trend, is going to be to the downside, right? So the way this is going to look like is we have drawn liquidity right here, we have drawn liquidity right here, and we have drawn liquidity right here. These three levels right here would be your price target if the market ever ends up reversing, right? Same concept, same everything to what I explained before with the banks, right? In this case, these levels of liquidity aren't the strongest, but they definitely are there for your price targets, right? So how would that look like in this type of setup? Well, you guys see in the commentary channel, I went ahead and told everyone, right? We're going to be looking at our price targets to be 19,229, or no wait, 19,299.75 and 19,330.75. Why do we have these levels? Let me show you guys right now, right? So, like I said, the current market trend is bearish, right? Since the market was closing in 20 minutes, sure, we could have had more levels to the upside, but I wasn't expecting such a big push up to take out those levels, right? So we're just going to be looking right now, we're just going to be looking at the nearest levels to just have as a quick in and out, price target, right? So in this case, what we're going to be looking for is going to be this high up here, right? You guys see, let me see, make sure, I think I mistyped this, right? Oh no, so it'll be, let me see, 330 right here, and we have 19,300, which is kind of the same thing, right? You guys can mark it out just like this, right? So in this case, you guys can see that when the market was going down, yes, we had a ton of pullbacks as the market was going down, but like I said, the market was closing in about 30 minutes, right? So I'm like, you know what? I'm not expecting the market to pump up 1,000 points and hit all these strong liquidities, right? So what we're gonna do is we're just gonna simply just look for the nearest levels, right, for a quick in and out trade. So what we're looking for here is gonna be drawn liquidity once you get hit, which is gonna be our PT1, right? So drawn liquidity plus PT, right? And we're gonna have drawn liquidity 2, of course, PT2 right here. Right, so let's catch up here, right? So we know what the trend is. We know we're getting a market structure shift, which is going to be the confirmation number 3. We swept drawn liquidity, which is confirmation number 2. And our final confirmation, which will be the cherry on top, is the inverse fair value gap. So simply all we're waiting for here is a simple break above the fair value gap, and we will go ahead and enter our longs, right? So let me show you guys right here, right? So once again, here's the game plan, right? A little bit after at 330 or 334, right, you guys can see we finally ended up getting the fair value gap inverse, right? How did that look like? Well, sure, we might have rejected off the fair value gap a few times, but buyers are finally stepping in extremely strong, which is signaling that buyers are gaining control in the market. If buyers are gaining control, we swept liquidity. What does that show you? Well, it shows you guys that we're getting a market structure shift, right, from being bearish to being bullish, at least short term, right? So in this case, what we're looking for is, well, we pretty much got it, right? We're looking for a simple break up of this bearish fair value gap. Once we get this break, that'll be our cue to go ahead and enter the longs, right? So how's that going to look like? Well, just like this, right? I told everyone, Here's the inverse. Ideally, we want to make sure that buyers are holding above this. Once we get the confirmation that buyers are holding above this, which would be a simple candle close above the inverse value gap, that would be your cue to go ahead and enter. So how would that look like? Well, let me show you guys right here, right? So let me play this a little bit more. And then there it is, right? So you guys can see right here, right? The candle ended up closing above, which was our final confirmation that we were looking for. I made sure to tell everyone, ideally what we want to see here is for buyers to hold above this fair value gap to gain control. What does it look like here? Well, buyers stepped in, we inversed this bearish fair value gap, we got the drawn liquidity sweep, and we got the market structure shift. We also ended up getting the close above. So your entry point would ideally be around here, or it could be here, right? It doesn't really matter, right? It depends how much you guys want to be risking, right? So, for example, let's say you guys anticipated the breakout and you guys entered right off 258, right? That would be your ideal longing position, right? So you guys would go long right here based off the inverse, right? You guys would type, let's say, long here, right? You guys can always place your stop. If you guys don't have a good stop loss, in this case, we didn't really have a stop loss, you can always place it at the most nearest level of liquidity. In this case, you would have a stop loss at 19,240. Right? Your take profit would be at 19,330. So here you're risking a 1 to 4 risk reward trade, which is beautiful. You guys are risking, let's say for example, you guys are risking to lose 100 to make 400, right? Which is a beautiful type of risk reward. This is what you guys want to be targeting every single time, right? So once you guys went ahead and went long right here, right? Of course, you're in the trade. There's not much more you could do other than letting it play out, right? And once again, you guys can see right here, we ended up getting the control. The price targets are all set. We know exactly what to do, right? So now it's pretty much a waiting game. Right after, you guys see that we ended up hitting our price target, right? Our PT1. So what are you going to do in this case, right? Well, if your PT1 got hit, which I'll show you guys right here, right? We ended up hitting PT1 for 50 points. This was a 50-point price target, right? So I told everyone here, if you took this trade idea, feel free to trim some off here and move your stop loss to break even. What does this mean? For my new people, or for my experienced people, you guys know exactly what it means. It's pretty much micromanaging your position. For my new people, right? How do you do this? It's extremely easy, right? So the reason a lot of people become profitable or stay very consistent in the market is because when you guys are in a trade, micromanaging your position is extremely important. You're constantly moving your stop loss. You're constantly taking profit here and there. You know what I mean? It's just micromanaging, right? So in this case, you guys can see that we ended up hitting our price target, which is right here. Right, so what you're gonna do is, since you have your price target or your stop loss, my bad, set at this low, what you're gonna do is you're gonna trim some of your contracts off. Meaning, if you guys, let's say for example, you guys enter with 10 micros or 10 contracts on options, right? You guys would ideally sell. It could be half, it could be less than half, or it could be more than half. It doesn't matter, right? You're just guaranteeing that profit since the trade went your way, right? So you're guaranteeing that profit, right? So if the trade goes against you, you won't be risking that profit. It's already in your account. Right, so what you're gonna do here is you're gonna go ahead and hit of course, it hit our PT. So we're gonna go ahead and take some profits here, right? So here I'm gonna type an example, right? So example, let's say I entered 10 micros, right? We entered 10 micros and our PT got hit, right? I'm going to sell. Let's say I want to sell 7 micros, right? 7 micros to guarantee. Or actually, matter of fact, let me show you guys right here. Let's go ahead and say that I sold 5 micros. I'm going to sell 5 micros for 250, right? What does this mean? Well, let's say our PT got hit for, let's say, for plus $500, right? So currently we're up in our position for $500, right? We want to go ahead and guarantee at least half of the profits, meaning if the trade goes against us, we're still going to be green $250. But how do we do this? Well, if we went ahead and took profits at PT1 for $500, right, and we sold half of our position, meaning we sold 5 out of the 10 that we're holding, that means we're going to be holding 5 left, right? So what we're going to do in this case is we're going to go ahead and guarantee that 250. We're going to go ahead and move our stop loss from red to break even, meaning if the trade goes against us, right, if the trade goes against us, we will still be up 250, even though the other 250 got stopped out for 0 at break even, right? So, and yeah, pretty much what ended up happening here is we took our drawn liquidity and we actually ended up sweeping this level of liquidity, which is why the market ended up going back down, right? So right here, you would have been stopped out. If you didn't take profit, you would have been screwed, right? But if you did take profit, which is what I always tell you guys, as always, you guys will see right here, I always tell you guys, PT1 hit. If you took the trade idea, feel free to trim some off at PT1, right? This is known as micromanaging. It's extremely, and I mean extremely important, right? If you guys aren't able to micromanage, you guys won't be able to find consistency in taking trades, right? Because most trades could go green, but not all the trades will hit your price target, right? So as it's going up into your price target, make sure you guys are moving your stop loss alongside with it, and of course, taking some profits on the way up, right? So that's exactly what we did in this case, right? What ended up happening? Well, our final 250, which is our 5 micros, it ended up getting stopped out, but we still made 50 points or $250 off this trade. Why? Because we were micromanaging, right? And of course, shortly after, the market ended up dumping out of nowhere, which I'm not sure why, but regardless, this is exactly how the trade went, right? So this is my entire explanation to today's trades, and my entire strategy behind inverse rally gaps, right? So here, let me catch up with the chat, right? Let me see. Let me catch up with the chat right here. Okay, let me ask you guys, right? What time frame would I mark out the draw on liquidity? Good question. The higher the time frame, the stronger the level of liquidity is, right? So you can find them on the 15-minute, 30-minute, 1 hour, or 4-hour time frame. Keep in mind, the higher you find them, the better they are, the stronger they are, because they have more confirmation on the smaller time frame, right? So yeah, Buddha, I would set my stop loss at the bottom of the inverse rally gap, just because we didn't have a good one in this case, right? So if we enter right here, keep in mind we didn't have any sort of wick, so ideally the best stop loss would be at 240, which is about 18 points, nothing too crazy. Do I use the 1-minute time frame? No, I don't, and I will tell you guys exactly why I don't use the 1-minute time frame. Main reason being is there is too much noise in the 1-minute time frame. What do I mean by too much noise? Well, there's too much going on, right? There's too many candles. There's a candle opening up every 1 minute, and it's just not something that I can really focus on, right? If there's one candle pushing up, then the next one pushing down, I can't really focus. I don't know what's going on, right? So in my opinion, I prefer the 5-minute time frame, like minimum. That is my go-to time frame, right? How do you know if it's an inverse rally gap rather than a fair value gap? Zach, good question, right? So in this case, the reason we know that this is going to be an inverse fair value gap is because all of our MSS model is pretty much aligning to inverse this fair value gap, right? So yeah, like I said, we do have a bearish fair value gap right here, but why are we going long off this fair value gap? Well, if the market already took out drawn liquidity, which is at 240, that means that the market is not really interested in going any lower because there's no levels of liquidity to the downside, right? In this case, we actually have more levels of liquidity to the upside. So it will make more sense for the market to go up and take out those levels of liquidity, right? So what's going on here is we swept liquidity, we have the fair value gap, and we are also getting a market structure shift, right? Showing you that buyers are in control. Of course, if buyers are in control, you don't want to be playing against them because you're going to get screwed over, right? So right here, let's look at the confirmations. So we have the bearish trend. We have the bearish trend. We took out drawn liquidity. We got the MSS, which is right here, right? And we ended up inversing this fair value gap, right? So why do we inverse it? Why do we inverse this? Main reason being is because we already swept liquidity. There is no more reason or no more room for the market to go any lower, right? Let me know if that made sense to you, and that goes for everyone in here, right? Let me know if that made sense. Let me see. And of course, if you want to learn more about it, yeah, I got you. If you want to learn more about it, I have the video linked right here, which explains everything about it, right? So here it is, right? Okay, so this works on ES. Yes, it does. Cheerios, this works on any stock, any commodity, any crypto, any future, anything, right? Because we're trading volume in the market, right? You guys know the market moves off volume. So if you're able to understand what the volume is doing, you pretty much become a master to the market. You know exactly what's going to happen, when it's going to happen, how it's going to happen, and so on, right? And that's why you guys see, I would say, a lot of consistency in my strategy. I get DMs all the time saying like, bro, I ended up making a lot of money off this. Good stuff. Like, thank you for the teaching. Main reason being is because we're able to read liquidity. We know exactly what the market is doing, what it's going to do, when it's going to do it, right? So let me see. That's how I used to lose money on pocket options. Okay, that's the first mistake. Pocket options is not an actual market. That thing is like, it's pretty much a casino. So that's your first mistake. And yeah, the 1 minute time frame is an absolute nightmare. I'm not saying the 1 minute does not work, but it definitely is a lot of pressure or a lot of stress, right? There's way too much going on. You can't really focus on a current trend because, you know, one candle is going to be extremely green, the next is going to be red, and so on, right? So yeah, where is the MSS? Oh, here it is. So the MSS, I don't know if you're asking in this chart, the MSS will be this candle right here, right? So we got the sweep and we got the MSS right here, right? So in this case, we got the sweep, the MSS, and the inverse value gap all in one candle, which was right here. Yeah, pocket options, in my opinion, it's a huge scam. It's pretty much what's it called? It's pretty much like gambling, I would say. It's just, bro, like, it's pretty much telling you if this move doesn't happen in 5 seconds, you lost money, bro. That is not how the market works. Can you recommend a broker with low and lowest spreads? Yes. So if you're gonna do futures, do Tradevate or Rhythmic. There it is. These two brokers are the best ones. Lost hundreds of dollars. I'm telling you guys, pocket options. I have never heard anyone become profitable off pocket options because realistically, it is it's kind of like gambling. Prop firm futures. I do prop firms. If you guys, of course, want the link to the prop firm that I use, that's 80% off. Here it is. Let me go ahead and send it over. So here it is, and this goes for anyone that wants to trade my alerts or futures or whatever the case may be. Here it is. Here it is. So prop firm that I use. There it is. Okay. Here, let me catch up with my YouTube chat. How do I know how low the market could go? By using drawn liquidity, right? So if the market went ahead and what's it called? If the market went ahead and took out drawn liquidity to the downside, which in this case would be 240, we have no more room to go lower, right? In this case, if we have no more room to go lower, the market is not interested in going lower. The market is interested in taking the levels of liquidity to the upside, which would be 299. It'll be 330. It could be this one up here, right? Let me see, magnet. It could be this one. It could be this one. It could be any of them, right? So yeah. Also, Karina, I'm pretty sure you got the premium not too long ago, but you never linked your Discord. So if you want, you can send me a DM on Discord. Here, let me send it to you. And I can help you. What's it called? Because I saw you got it like 2 months ago, but you never got access to it. So if you, I can always give you another 2 months for free since you never really got access to what you paid for. So you know, if you do want that, just DM me on Discord. I put my username. Or I can give you the Discord link. I think that'll be easier. And just send me a message there, and I got you. Let me see. Now, one thing I want to kind of review with you guys, right, is let me know if you guys have any questions behind the setup, behind my model, behind anything, right? Because we kind of already finished the review, right? But of course, if a lot of you guys, I know a lot of you guys are new in here. Maybe some of you guys don't understand it. So I do have some time, right? I definitely have some time. If you guys want me to review anything with my strategy, if you guys want me to review anything based off trading, let me know. I do have some time to answer some questions here, right? Sorry, I'm a bit late, but the market was really hard to read today. It's not that it was hard to read. We just didn't have any setup, right? If we don't have any setup, there's nothing to trade, right? Zero. So the one setup that we really did have today was, of course, this inverse rally gap model, right? I got the lifetime one. Is it for Blastoise trades or for another one? Let me know. Let me see. What do you think the best time to trade is? EST. I would say 10 in the morning. 30 minutes after the New York market opens. That is my go-to time to trade. Yeah. So Karina, just join the server, type a message or whatever, and I'll hook you up with the 2 months. I got you. But yeah, let me see. Do you follow any bias? Right? Okay. So Mantis. I kind of do, but not really. Right? I don't like to trade with my own bias. I like to trade with what the market is giving me, right? So how do we know what the market is giving you? Well, by looking at the trend, right? In this case, the market trend was bearish. So ideally, most times, you're going to be trading to the downside, right? Because the trend is bearish, right? So I don't really trade with a bias because, okay, the reason I say I don't trade with the bias is because if you guys trade with the bias, what that's going to end up doing is even if the market is screaming bearish and you guys are bullish, you guys are going to be looking for reasons to take longs. If you guys take longs in a bearish market, you're going to get stopped out. You know what I mean? So ideally, I don't really use a bias, but I trade more so with the trend in the market, right? So with whatever the market is doing at the time, I will trade based off that. What is a reasonable amount to start trading? Okay, good question. I would say it's about 500 minimum to 1,000 suggested, right? So if you have 500, I would say 500. If you have 1,000, the more the better, right? If you guys do not have that type of money, good. I have 2K. Okay, perfect, right? So yeah, you're good. You're good on that. So if you guys do not have the money to trade with 500 or 1,000, you guys can always trade with about $30 with a funded account. They give you about $50,000 to trade with, and all you're doing is paying them about $30, right? So if you guys do want to check that out, it'll be right here. You click this, you scroll down, you cop a Tradevate account. Make sure it's Tradevate, right? You scroll down, right? Exactly where it says trade of a plan, and it'll be right here. You guys can get a 50K account or whatever, right? Sure, it might say $187 a month, but with my code, which is called Blastoise, you'll get it for about $30 a month, right? And it's not a month. The eval phase is a month. The test phase, when you guys pass the test phase, you do not pay anymore, right? How many accounts? How many trades do I take on average? Usually, it ranges from 1 to 3. 3 being the absolute maximum. I will never take any more than 3 trades a day, right? But if I take one winner or one winning trade, I would pretty much call it a day. So usually 1 to 2 trades a day. What's the catch? Honestly, I don't really think there's too much of a catch. I mean, of course, there's the pros and cons. There's a lot more rules to funded accounts than there is to live trading, but it's not really like that much of a big deal. If you guys know how to trade, oh, my camera died. Oh shit! Here, let me go ahead and turn this off. Hold up. Let me see webcam. Let me turn this, and let me turn. What else? What else? Let me see overlay camera. Okay, there we go. My camera died, but yeah. Okay, so let me see. Oh, KB. Okay, got it. So wait, KB, I think you already got lifetime. Then I think it was another person that has the same name as you. But yeah, there is. How long is the Blastoise code available for? It is available. It's always available actually. But the current one, if you use my code right now, oh, actually, there's no discount. Oh shit, the discount ended. All right. So guys, before if you guys are gonna buy a funded account, don't buy one yet. Wait for the discount to come up, which should come up by tonight or tomorrow. It could be 80% off, 70, or even 90% off, right? But right now, do not buy a funded account until the discount comes up, right? They always do one, so don't stress it. Let me see. I will do more research on funded accounts, but what's your POV? I trade funded accounts. I make money off funded accounts. I get payouts. I post my payouts. So I'm here to say that funded accounts, at least some of them, are trusted. Make sure you always do your research. I've done my research with TopStep and Apex. Those are my go-to funded accounts. I love those, right? They're legit. They accept your payout. Let me drink water. They accept your payout and all that good stuff. Let me see. If you don't mind me asking, how much did you start trading with, and how long have I been trading? Good question, right? So I started at 15 years old. I'm turning 19 very soon, right? So I've been trading for nearly 4 years, and these 4 years is every single day for 4 hours. I'm not 4 hours, 8 hours a day, every single day, right? So I've been trading for nearly 4 years, every single day. For those in my Discord, you guys know I am on every day, no time off, right? So yeah. I've been putting in the work. I learned by myself. I mentored myself. I lost a lot of money myself, which I really wish I didn't. Where's the link to the prop firm? Here you go. I got you. There it is. But yeah. So pretty much, really good question really good thing that you bring it up, right? So, when I first started, I literally had no money to buy any mentorship. I didn't have any money to buy a course. I didn't have anything. So I had to learn by myself, right? And I know for a lot of you guys, some people just can't afford courses, which, it's completely fine. You guys do not need a course to make a living off trading, right? Let me see. That's weird on my browser. It's showing a discount. Let me check for you. Hold on, because it might have been glitched. Let me see. Hold up. Let me search up Apex. Apex Trader Funding. Let me see. Is there a discount? No, actually there isn't. What the hell? Unless it's down here. I don't know. But if there is, I mean, just let me know. But okay, so pretty much the reason I do these free classes practically every. Oh, let me see. It's 80% off for 7 days. Okay, perfect. Okay, so there's still 80%. Okay, so yeah, if you guys use my code, which is called Blastoise, you guys will get 80% off your funded accounts. I'm not sure why it's not showing up for me, but it's whatever, right? But yeah, so pretty much the reason I do these free classes practically every day and I teach every single person that I possibly can is because when I was in your guys' shoes, I know a lot of you guys are starting off or you guys are not profitable. When I was in your guys' shoes, this is exactly what I would want, to pretty much learn, right? I would have wanted this type of help. I would literally pay $1 million for this type of help, right? So I'm here to deliver, what I would have wanted when I was in your guys' shoes. Of course, I learned as time went on. Of course, I've been doing this for 4 years, so I kind of got the hang of it alone, right? And I'm here now, thanks to RP, thanks to you guys, in the stream, thanks to my Discord. I'm here now able to mentor you guys and for you guys to have the same journey as me, right? Just a lot faster. But yeah, let me see. And oh, by the way, the amount of money that I started trading with was $200 for with options, I started. I'm pretty sure everyone started with options. What's it called? I started with 200. I turned it into 500, and I lost everything. But those $300 profit that I made was just enough to convince me that this is what I wanted to do for a living. And here I am now, teaching you guys exactly how to trade, right? And yes, I would say I do trading for a living. You know, I would say pretty confidently, right? So definitely a dream career. You know, I worked towards it every single day, 8 hours a day for 4 years, and here I am now, right? Let me see. Um, Let me see. Do you? Oh, did you take the? Did you look at the trade I sent you? Let me go ahead and check that out. Right, I'm gonna check it out right now. How do you trade on red folder days? Just like James said, do not trade red folders, guys. Never trade red folders. Never trade before they come out, and try avoiding them a bit after they come out. Why? Because no matter what type of line or no matter what type of perfect setup you guys have in the market, that news report will not care what you have in the chart. Yeah, exactly. So for my premium members, you guys know I never trade before news comes out because it is not something that I suggest. It is unpredictable. You will lose money most times. So definitely be careful on that, right? But yeah, Beam, I'm gonna check it out in a second. By the way, do I have 6 figures? I'm not gonna say anything, but I don't really like talking too much about it. But I would say that I definitely kind of made it in trading. At least I'm not trying to jinx it, right? Do I stream on YouTube for free? Yeah, I do actually. Here you go. Here you go. All my classes are live on here for completely free. Trading news is a gamble. Exactly. You don't know if it's gonna be bullish or bearish. And yeah, for those in here, I know most people left because the class is kind of over. If you guys want to go ahead and check out my YouTube with all my classes, everything recorded from A to Z, it is all on my YouTube. So click on that link. I do live trading on there as well. So if you guys do want to watch the live trades for completely free, it's all on there. So make sure you guys subscribe to that, right? But let's see. Let me catch up with the chat here before I review Beam's trade. When you make a profit on funded accounts, how does the payout work? Okay, so with Apex, which is what I use, you keep the first $25,000 that you make. Anything after, you keep 90% of what you make. So let's say you made the 25K. If you make $1,000 the day after, you're gonna keep $900 out of that 1,000, right? So it's a 90-10 split. But okay, let me see. When I buy this funded account, then what? I'm lost. Okay, I can go ahead and show you. TY, just hit me up on DMs. I'll guide you completely from A to Z on how to set it up. It's extremely easy. Even a 5-year-old could do it, right? So just send me a message. I'll respond to it. Add me if you want. That goes for everyone in here. If you guys have any question or anything, just let me. Just add me. Just add me. How many PA accounts do I have? Right now I have 13. I had 14. I blew one up because I was just fucking around with it. I don't really care about it that much. Because I trade more on my live account. Right? Been a while. What's going on, David? Hey, what's up, M2? What's going on? What's going on? What's up? What's up? Okay, but yeah, Pressure and TY, feel free to hit me up. Saint as well, guys. Add me as a friend. Damn, you guys send me. Okay, and send me a message with your question, and I'll respond as soon as I end this class. Right? So yeah, I'll guide you guys through it. But okay, let's go ahead and review Beam's trade. Let me go ahead and bring this up. Let me see Beam. Okay, so let me bring this up. I'm gonna go ahead and copy this. Wait, my YouTube crashed. My Discord crashed. You see. My bad, guys. My Discord crashed for some reason. I don't know what happened there. But here, let me go ahead and pull this up all the way. All right, my bad on that. My bad. Here, let me go ahead and pull this up just like this. Hold up. Okay, my bad on that. Okay, so Beam. Let's go ahead and get your trade here. Right, so Beam. Let me copy this. Okay, now it actually copied, right? So let me go ahead and pull this up, right? So let me go ahead and put this on open link. Okay. Oh, it's a little bit blurry here. Damn. Okay. Let me see what I could do, cause damn, it's blurry. Beam, would you want me to wait? Would you want me to review this in the class, or would you want me to like just DM you and break down the trade to you? Cause it's a bit blurry. I'm not sure why. But yeah, just let me know. Let me know whatever works with you. Do you execute trades on TradingView, and what is the difference between a static and a rhythmic account? Okay, so no, I do not execute my trades. Let me see. It doesn't matter. You can review it in the class. It's up to you, bro. Just let me know. Just try resending it. Hopefully, it's a lot more clear. And I'll go from there, right? Let me see. Will I be uploading this live on YouTube? Yes, I do, Kevin. It'll be on my YouTube channel. The second I end the stream, it'll be recorded. I'll be there. But okay, so no, BBJ, I do not execute my trades on TradingView, and here's exactly why. Right, the reason I don't do it is because okay, you guys know that TradingView has its own server and TradeVate has its own server, right? So you guys know I trade very volatile markets and very big moves, right? Which require very fast reactions, right? So if you guys are placing a trade on TradeVate, or I mean on TradingView, what you're doing is you're sending the order out to TradingView. TradingView then has to send out the order to TradeVate. Then TradeVate has to go ahead and get the order and fill it, right? That 1 to 2 second difference is a big difference. I'm telling you guys, it's a very, very big difference, right? Here, let me go and check something out real quick. Oh wow, it actually tells you when I'm streaming. Oh, that's fire. Okay, bet. But yeah, it actually tells you guys, like there's such a big delay that a 1 second delay could be a 5-point difference. That's 5 points that could have made you money, right? So I'm not saying it's bad, but when you guys are trading volatile markets, it's definitely not in the best favor, right? So what I do is I use TradingView to go ahead and wait. Let me screen share. I go ahead and use TradingView to actually what's it called, to view the chart because it's very clean and very easy to use. And on my second monitor, I go ahead and have TradeVate and my Discord open. My Discord to alert the trades, and of course the TradeVate to, of course, buy and sell. So that's what I do. Now, the difference between a static and a Rhythmic account, okay, those are two different things. I'm pretty sure you mean TradeVate and Rhythmic, right? TradeVate is its own platform and Rhythmic is its other own platform, right? It's all preference. In my opinion, I just think that TradeVate is the easiest out there to use. It's the best one. So I always suggest TradeVate, right? But yeah. Let me see. The trade on Monday was super fast, not gonna lie. How much did we end up catching on Monday? Let me see, hold up. On Monday, we ended up catching a, when was Monday? Today is the 24th. So Monday would have been the 22nd, right? Yeah, the 22nd. Okay. We ended up catching a 65-point trade, actually. Okay. Oh, yeah, that's right. Okay, I remember. Yeah, Monday was really good. 65-point trade on Monday. You guys see the alert here and everything. So we took NQ shorts. Here, let me catch up with the chat. Let me see. What's the name of the platform? TradeVate. TradeVate. It'll be like this. Here, let me go ahead and give you the link for the prop firm. If you do want to use TradeVate, here it is. There we go. Do yourself a favor and go read the rules for the. Okay, yeah. By the way, guys, before you guys buy a funded account, the first thing you guys need to do is make sure you guys know the rules behind fundeds. It's not as simple as a live account is, so there is a bit of a catch, right? Not a huge catch, but there's just some additional rules you guys need to follow, such as not trading on news days and so on, right? So yeah. Let me see. But wait, let me catch up with my YouTube chat. I'm down 500 on options, so I moved to futures with funded accounts. Kevin, I can almost guarantee you that you already like funded accounts more than options. If you're still in here, if you are, let me know. But I'm more than positive that you prefer futures over options already. DMs again. Let me know if it's better. Let me check it out for you, my buddy. Okay, so you sent two pictures. Okay, let me go ahead and pull this up. So open link. No, bro, it's still blurry. I don't know why. If anything, Beam, since I have a lot of DMs coming through, I'll just review all of them. I'll just review your trade and just DM it to you. I've heard rumors that Apex is not wanting to pay out. Have I ever had an issue with them? Okay, so yeah, okay, I have this one friend. His name is Lonto Trades. I don't know if you guys know about him, but he's an amazing trader. That is my boy. He's my friend. And we trade kind of the same strategy, right? My boy Lonto, these last 3 months, he's made $40,000 per payout, right? So about 3 payouts, so he's made almost $100,000, right? So I guess Apex is catching on to him because he's winning way too much, and they're like, bro, there's something going on, right? So they're denying his payout, right? But just because one payout is getting denied does not mean that the rest is getting denied. My payouts are going through, my friends' payouts are going through, my members' payouts are going through. There is not an issue with that, right? There's just, I guess they're kind of trying to catch on to something that he's doing, which he's not doing anything, right? What's it called? He's trading legit. That's my boy. You know, so I'm pretty sure he's gonna get the payout very, very soon. Yeah, they usually tell you the reason, right? So if they ever deny the payout from you, they're probably just gonna say you probably made too much money, you broke the consistency rule, you either traded on news or you averaged down on losing trades, which you're not allowed to, right? So make sure you guys are reading the rules before you guys buy a funded account. You guys need to understand that, right? But let me see. I don't know why, but I find TradeAway confusing to execute trades. It's not really all that hard, to be honest. Honestly, to the top, there's gonna be a buy and sell button. You just click buy or sell, right? You don't need to actually look at the chart for TradingView or TradeAway. You can use the chart for TradingView and then just buy and sell on TradeAway. That's what I do, at least. Okay, let me see. Let me open this up. Let me see. Cause it's loading here. It's not loading for me. Beam, if anything, I'll just review the trade for you in the DMs, bro, because we're having a bit of issues here, so it's too blurry and all that stuff. But bro, Beam, I got you. Yeah, I'll respond instantly the second I end the stream. I'll respond to I'll respond to everyone's DMs. Let me see. David, how do you trade with gaps? Honestly, there's no string attached. It's really easy, right? So how do you trade a gap fill? Let me show you guys, right? So let me show you a real-time example. So you guys know NQ gap down today. It's literally this simple. So you look for strong buying coming in since it's a bearish gap. You mark out the gap just like this. Your entry point will be at the top of the gap like that. So your entry point will be at 883. Your price target will be at 946. It's that simple, right? You simply just wait for a strong buying candle to break above this gap. Once you get the strong buying candle, that is your cue to go ahead and enter. So it will look like this. We get the buying candle, boom, we rip into it. You enter right here, right? And you set your price target just like that. Is it a fair value gap? No. It's a regular gap. There's just no volume here that, of course, the market wants to go ahead and fill. It is not a fair value gap, but yeah, it kind of is. But it's just more simple, like Zero said. Yeah. But yeah. Let me see. Alright. Okay, perfect. Alright. So guys, I'm gonna go ahead and call it a class for today. I feel like I'm caught up on questions. We got the review done and all that good stuff. So guys, thank you so much for coming by here. If you guys, of course, want to check out my YouTube, get access to the live trading, more classes, and the recording, it's all here. Alright guys, so feel free to subscribe, and I'll see you guys in the live trading tomorrow on the YouTube. Alright guys, doesn't always work. You need to have a bias. Exactly, Nate. Yeah, so you are definitely right on that. Alright guys, so yeah, I'll see you guys in the live stream tomorrow. Thank you guys so much for coming on by. It really means the world to me. And I'll see you guys tomorrow. Alright guys, take it easy. Peace out. Alright guys, I'm gonna send the link to YouTube right now. Alright, take it easy guys. I'll see you guys tomorrow. Peace.